The copper industry is still trying to figure out how Washington's massive threatened 50% tariff on the red metal will even work. Let's get more from Helen Amos, Managing Director and Commodities Analyst at BMO. Thank you very much.
Thanks. Pleasure to be here.
You trained as an electrical engineer.
That's right, many years ago.
So you know a lot about the properties of copper, of course.
Yes, excellent conductor.
So it is confusing, isn't it? In what form does most copper come into America?
Yeah, so the largest form that copper arrives in the US is in the form of refined metal or cathode. So the US imports around 900 kilotons of refined copper per year, and that makes up about 50 or 60% of its domestic demand requirements. But in addition to that, the US also imports some copper in the form of semi-finished products, so things like wire rod, tubes, sheets. So these are the things that ultimately find use in various applications like construction and the grid, vehicles. And then just to add one more nuance to the picture, the US also exports copper scrap.
Huge amounts.
Huge amounts, almost 1 million tons. And this is the big issue because currently the US doesn't have enough smelting and refining capacity to absorb its domestic scrap supply. So that's just one other complexity to this whole debate.
Just on the smelters, so America, exports almost 1 million tons of scrap copper every year.
Yeah.
But it would take quite a few years to build the smelters that could utilize that.
Yeah, absolutely. I mean, we've seen a couple of new smelters entering the market in the last few years, but no way near enough to soak up all of the domestic scrap that is generated by the US. Now, there's a lot of debate about whether, the introduction of copper import tariffs and higher US copper prices will now incentivize the build out of more what we call secondary smelter capacity. And from what we can tell, like based on historical precedents, that's about a 2 to 3 year construction development time.
I imagine local communities won't be thrilled. I mean, they do emit a bit of pollution, smelters.
They can be, yeah.
Maybe they've got better, I don't know.
Yeah, but I think it's more that, taking that investment decision. So, we're talking about hundreds of millions of dollars of investment in new capacity. And given there's still a lot of uncertainty over policy beyond the current term of the president, I think that's where we probably see the sticking point is not necessarily the construction, but the investment decision. Yeah,
because obviously you're thinking decades ahead with a thing like that.
Yeah, and usually, with any of these kind of like industrial investment decisions, you're looking at, ultra long-term investment, looking for payback over a very long period of time as well. So I think that's still opening lots of question marks around whether the US ultimately can become self-sufficient in refined copper in the 2-3 year time frame.
But you say that it is likely that refined copper imports will be subject to the levy?
Yeah, at the moment, we actually don't know. So this is the whole thing. Like, we've had the announcement just over 2 weeks ago now that there'll be 50% import tariffs, but really lacking any detail in terms of the products, the type of products it could be applied to. There's even question marks over, will there be exemptions made for particular countries? We just don't know. This is all being debated at the moment. But yeah, if we look at the precedent set by the Section 232 tariffs on steel and aluminium, that was on, the basic steel and aluminium products. So it seems likely that it would be applied to refined metal and possibly some of the derivative copper products.
One interesting point I thought you made is the demand destruction for copper may not be all that great because often it's part of another product or system or project and it's not a huge cost component.
Yeah, so copper itself is rarely like the majority of the cost of a given application. And I think sometimes this demand destruction argument is overstated. So if you think about construction, copper might be only like 5% of the total cost of a project. So labour, for example, is a big input and other materials. So, a $1.50 per pound increase in the price of copper, that's only like a 1% increase in the construction project cost. In grid, it's a bigger deal. So copper might be 20%. But, run a $1.50 price increase through, that's only like a 6% increase on the cost of the application. And we think that probably can be absorbed in the context of all the other inflationary factors that we're seeing in the economy.
And finally, maybe we could just look at that US copper future chart again. So we've seen US copper futures go to that massive premium to London.
Yes.
Is that likely to persist?
Yeah, so it's moved sharply in the last couple of weeks. So we started off at about 12% COMEX to London premium, and then we're now at around 30%. So our sense is that it's going to move higher from here, maybe towards what it should move towards the 50% import tariff rate. It's just that the pathway to that is likely to be pretty uneven because we have got this issue of quite a lot of inventory within the US at the moment that's been accumulated over the first half of the year. So that's kind of acting as a sort of counteracting force on the COMEX price at the moment. But, you know, as long as there's no country exemptions and that the 50% tariff comes in, apparently from the 1st of August, which is next week, then we should see the spread move higher from here.